Here is the U.S. market summary for the week of August 25th, 2025. This week, the market was defined by a sharp conflict between encouraging economic growth and persistent inflation fears. Strong corporate earnings and robust economic data clashed with concerns over the Federal Reserve's future policy path, leading to a volatile and ultimately negative week for the major indices. The weekly market dashboard clearly illustrates this volatility. After a midweek rally, S&P 500 finished the week down 1.64%, with the tech-heavy Nasdaq Composite falling a more significant 2.09%. Dow Jones was the most resilient, ending down only 0.36%. Notably, VIX, a key measure of market volatility, jumped nearly 18%, signaling a significant increase in investor uncertainty heading into September. Sector performance was defensive, with utilities and staples holding up best, while technology and communication services saw the largest declines. This week's earnings from major retailers painted a picture of a polarized consumer. High-end retailers like Dick's Sporting Goods beat earnings expectations, indicating that affluent consumers are still spending. However, retailers focused on the value-conscious consumer, such as Kohl's, showed significant weakness. This divergence creates a complex outlook for inflation. While weakness in lower-end goods could be disinflationary, resilient high-end spending may keep services inflation stubbornly high. The most anticipated earnings report of the week came from NVIDIA. The company delivered what can only be described as a monster beat, with revenue and data center results far exceeding analyst estimates. However, the stock sold off following the news. This was a classic sell the news event, where the stock's price had already risen dramatically in anticipation of great results. When the company's forward guidance, while strong, did not exceed the market's incredibly high expectations, investors took profits, sending a cautionary signal about sky-high valuations in the AI sector. The latter half of the week was a tale of two completely different market narratives. On Thursday, stronger than expected GDP growth of 3.3% and low jobless claims sparked a major rally. The market embraced a growth is good logic, believing a strong economy would translate to strong corporate profits. This optimism reversed entirely on Friday when the Core PCE inflation report showed 2.9% year over year. This immediately shifted the market's focus to inflation is bad, as it significantly reduces the probability of the Federal Reserve cutting interest rates in the near future, causing a sharp market plunge. Friday's broad sell-off has placed a number of fundamentally strong companies at more attractive valuation levels. This list highlights several quality-on-sale stocks that were pulled down with the market. For example, Netflix, despite a 1.98% drop on Friday, still has over 10% upside to its 2025 high, supported by its successful ad tier rollout. Similarly, Palantir and Coursera, which are leveraged to the long-term growth of AI and data, now have potential upsides of 15% and over 100% respectively to their prior highs. Looking ahead to the first week of September, the market's focus will remain squarely on economic data. While several manufacturing and services reports are due, all eyes will be on the jobs report on Friday. This will be the most critical data point before the next Fed meeting. A strong report showing high job growth and low unemployment would likely add to market pressure, as it would give the Fed no reason to consider cutting rates. Conversely, signs of a cooling labor market could spark a relief rally. Next week's earnings will provide further insight into the key themes of inflation and AI. On the inflation front, reports from Dollar Tree and Macy's will give us a clearer picture of consumer health at both the low and middle income levels. We will be watching store traffic and inventory levels closely to gauge whether the consumer slowdown seen in other retailers is broadening. On the AI front, earnings from Salesforce and Broadcom will be critical. After NVIDIA's results, the key question is whether the benefits of AI spending are spreading throughout the ecosystem. Salesforce's report will be a key indicator of corporate spending on AI software, while Broadcom's results will provide insight into the demand for the underlying networking chips that power AI infrastructure. In conclusion, this week marked a significant shift in the market narrative. The focus has moved decisively from the limitless potential of AI back to the immediate reality of inflation and Federal Reserve policy. The conflict between bad news is good news and a strong economy is good news is creating significant volatility. This environment can create opportunities for selective investors in high-quality companies, but it also underscores the importance of risk management, as uncertainty is likely to remain high heading into the September FOMC meeting. Thank you for joining our weekly market briefing. We will continue to monitor these developments and provide you with timely analysis.